Welcome to our SBI Securities weekly market podcast. Today we would be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on key sectors and stocks that could make a move from here on in the coming week. In the week gone by, with RBI holding its key interest rate steady and upgrading GDP growth projections, Nifty witnessed continuation of its bullish momentum and closed at yet another fresh lifetime high, up 3% for the week. Bank Nifty outperformed Nifty, gaining 5.45 for the week. Overall, looking at the larger picture, Bank Nifty is trading 1.5% higher compared to its September swing highs, while Nifty is trading 3.5% higher from the same period. However, the broader markets, that is the small cap and mid cap index, despite hitting fresh lifetime highs, underperformed Nifty as they gained 2.35 and 1.3% each for the week. Coming to the macro factors, the dollar index has stabilized between 103 and 104, while the US 10-year Treasury bond yields are trading with a weak footing around 4.3. This indicates the continuation of liquidity flows towards risk-on asset classes like equity markets, both global and Indian. Also, Brent crude oil remains weak, currently quoting $75-76, which is a big positive for an oil importing economy like India. The current trend in Brent crude suggests that it could be that the crude oil prices could further dip towards the levels of $70 per barrel. Overall, the global factors are lining in favor of the Indian equity markets at the current juncture. A quick look at the global markets post the consolidation in the S&P 500 for 11 sessions. The index has finally crossed its short-term resistance zone of 4,550, 4,580 levels and is heading towards levels of 4,710, 4,740 on the upside. European indices have also notched up gains of 1.5 to 2% gains for the week. This indicates that the global texture is positive. All eyes now would be on the US Fed, which would be announcing its monetary policy on 13th December. Coming to the levels for Nifty, post strong bullish momentum in the past few sessions, going forward for the index 20,700, 20,800, which is the gap area created last week, will act as a strong support, and till this zone holds, index could continue its rally towards higher levels of 21,280, 21,400. On the downside, below 20,700, index can retest support levels placed at 20,450, followed by 20,225. With RSI indicator sustaining above the levels of 85, 86, it is indicative of overbought nature of the index, implying a possibility of the index consolidating in the coming few sessions, especially with the US Fed meet scheduled on 13 December, which could keep the entire global markets on a wait and watch mode. Week on week, Nifty futures have added 22% open interest, with prices gaining 3.4%, indicating strengthening of the long built up positions in the week gone by. On the OI data, significant call writing is witnessed in 21,000 and 21,200 strikes, while on the put front 20,900, 20,800 witnessed considerable open interest addition. Overall, the range for the short term perspective could be 20,700 on the downside and 21,250, 21,350 on the upside. The volatility index India VIX has ended at 12.5 levels above its 200 DMA zone. Going ahead, any sustainable move above the level of 14.5 will lead to a sharp upside rally up to the levels of 17.5, 19 in the short term, while on the downside the zone of 11 will act as the immediate support for India VIX, below which it can test the levels of 9.9, 9.5. Now moving forward to Bank Nifty. Bank Nifty in the last week has created a fresh lifetime high and crossed its prior swing high placed at 46,300 zone in July and September 2023. The immediate support for Bank Nifty is likely to be the zone of 46,300, 46,500, and until 46,300 holds, index can manage to rebound up to the levels of 47,950, 48,080 zone, where resistance will be witnessed. In case 46,300 breaks, index can retest its next support placed at 45,800, 45,600. Week on week open interest action in Bank Nifty futures has been flat while prices have gained by 5.5%, indicating short covering nature of the rally. For the next weekly expiry, significant open interest built-up was witnessed in 47,000 and 46,800 puts, and on the call side it was seen in 47,500 and 48,000 call, implying a near bottom range of 46,300 48,000 for the banking index. Now moving forward toward the stocks and sectors in momentum. Potential outperforming sectors that we currently see, a lot of sectors currently are in momentum, especially financial services, that is NBFC and insurance, pharma, cement, mid-cap IT, oil and gas, auto, infrastructure are looking positive. Most of them have reached overbought zones with RSI approaching 82 84 levels and above. It is not a sign for going short, but definitely some consolidation could be witnessed from here on in the sectors, and there could be further sector rotation in the coming week. Focus on good quality names, focus on good quality names, control over leveraged positions, and remain hedged wherever possible. Coming to stock specific move, let's discuss a few stocks where setups are bullish as well as derivative data is supportive. Buying momentum has emerged in banking, especially from large caps such as Axis Bank, HDFC, ICICI Bank, while PSU banks have found its mojo back with Canara Bank, PNB, Bank of India witnessing decent short covering. We expect the current up move to extend in the coming week too. IT index has closed at its highest level since April 2022, and we feel key mid-cap names such as LTTS, LTI, Coforge, and large-cap companies such as Infosys, TCS, HCL Tech could outperform in the coming week. Momentum was also visible in capital good names such as LT, Cummins, Siemens, BHEL, and power counters such as Tata Power, NTPC. We feel the strength and momentum could be visible in these counters too in the week to come. With the dollar index having stabilized at lower levels of 103.5, metal stocks saw bullish moves with the likes of JSW Steel, SAIL, JSPL, Tata Steel, and Hindalco leading the way on the upside. Cement counters too witnessed good traction with the likes of Dalmia Bharat, Ultratech Cement, Ambuja saw decent build up on the long side. From the broader market perspective, bullish setup was observed in the likes of Titan, Reliance, HDFC, AMC, LIC Housing, Bajaj Finserv, Sun Pharma, Indigo, HAL, BHEL, Concor, UBL, and Bharat Forge. Now coming to the FI DI data. In the cash segment, FIs and DIs have been net buyers in the week gone by to the tune of 9,252 and 4,326 crores respectively. FI long short ratio for index futures has strengthened to 58% from the previous week's 38%, which is quite positive. On the stock futures front, on a weekly basis, FIs have bought to the tune of 16,000 contracts. So looking at the overall data, it is positive, and buying on dips is advisable until Nifty holds 20,700 and Bank Nifty holds the levels of 46,400, 46,300 levels on spot levels. So just to summarize, key support for Nifty for the next few days will be the level of 20,700, 20,750, and resistance would be seen at 21,280, 21,350. For Bank Nifty, the key support would be the level of 46,300, 46,250, and resistance would be 47,950, 48,100. That's all for this week's episode of SBI Securities Weekly Market Pulse. Wishing you all an excellent weekend ahead. We hope you enjoyed listening to our podcast and finding it useful for your trading decisions. Kindly do subscribe to the channel for such updates and interesting insights, and also do share it with your friends and relatives. Until we meet next week again, happy trading and stay safe. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.